welcome to Chapter 20, Auto Insurance, the first of two chapters focusing on auto insurance in the Principles of Risk Management Insurance course. Now this chapter is going to focus mostly on personal auto policy, sometimes known as PAP. Now, the personal auto policy has been relatively the same for a long time as far as how it's organized in the United States. It does change state by state because there are different state laws that affect insurance. So the insurance has a big influence based on state laws. So some things that may be in a chapter might be different depending on what state you're living in. A major change that insurance policies had to contend with are the new car sharing apps, such as Uber and Lyft. So they updated some of the laws surrounding car insurance to include people who drive for transportation platform network. Now, what makes an eligible vehicle? Well, it has to have four wheels, be a motorized vehicle, and be leased or owned for at least 6 months at a time. So a bicycle cannot be covered by personal auto policy. A motorcycle can't be covered. A tricycle or a tri-bike. So these things, there's separate insurance that you can get for some of these, but you don't use the personal auto policy for those type of vehicles. You're going to use it for a regular car, a pickup, a van, anything with a gross weighting of 10,000 pounds or less. So if you're going to drive a tractor trailer, that's not going to fit in with a personal policy. It's over 10,000 pounds. Now, let's talk about some autos covered by the policy that can include a newly acquired auto, a used auto that you purchased, a trailer owned by the named insurance person, a temporary substitute vehicle. So this is important. So if your car is damaged and it's in the shop for repairs and you have a temporary vehicle that you're going to use, that's going to be covered by your auto policy. So we'll talk about this a little bit more in the chapter, but if you rent a car and you don't have to buy the rent-a-car's insurance because your personal insurance policy should cover the car as well as you. Now, let's talk about the liability coverage part A. So part A deals with liability. And if you remember from the previous chapter when we discussed liability, you should be pretty well aware of what a liability is and a liability lawsuit. Now, it's really the most important part of the PAP because it's a part of it you're going to use. All policies are going to include and you're going to use in case of emergency. So it's going to protect you against any type of lawsuit or claim that's going to be developed from your ownership or operation of a vehicle that's considered covered. So coverage is usually written with the coverage in separate segments, which we call split limits, where the amount of insurance for bodily liability, property damage liability are stated separately. So coverages can also be written with one single limit, which applies to both, the same amount basically for both bodily injury and property damage. Now, the liability coverage is going to apply to the person named in the insurance or any resident family member. So if one person in the house owns a car and has car insurance in the car, and his wife, son, or daughter drive the car, typically in most states, that insurance will be directly applied to those family members as well, as long as they're not, if it's a rare occurrence that they drive the other person's vehicle, they'll be covered. If it's a very common occurrence, then those people who need to be mentioned or at least are included in the policy, the coverage policy. So oftentimes, if a husband and a wife have two vehicles and their children use the vehicles, it's a good practice to inform the insurance agency that your children are of age and are going to be driving the car on a regular basis, so they can be more concretely included in the policy, although this will raise the price of your policy as well. Also, any person or organization legally responsible for any insured's use of a covered vehicle on behalf of that person or organization. So this is basically if you're using a vehicle for work-related reasons or errand-related reasons. Any person or organization legally responsible for the named insured or family member's use of the auto or trailer, other than the covered auto or one owned by the person or organization. So these are just stipulations of who will be covered in the liability insurance. So what you need to remember is if you have a car and you have auto insurance on that vehicle, then you are definitely covered. Now, if a family member borrows that vehicle, in most cases, they're covered as well. Now, if you use your vehicle for a business-related reason, your boss says, take your car and go pick up these materials and come back to the work site, then your employer could be responsible for any accident that you're involved in. So these are situations where you can see how your coverage extends. So if you have insurance coverage and you drive somebody else's car, your insurance coverage would cover you for that car as well, as long as it's not a car that you regularly drive, or if you drive a rent-a-car or a replacement car, your insurance coverage will cover that as well. Now, in most cases, the most protection you'll have, and the most concrete coverage, will be when you drive the car that you own and are insured for. So that's probably what you should stick to in most cases, is driving the car you own that you have personal insurance on, because in that case, it's the most concrete conclusion of who's going to cover liability. In other cases, it may have to be determined at a later date. Okay, so Part A, continuing with Part A, liability coverage. The car insurance company is going to agree to provide defense and pay all legal costs that you may suffer for claims filed against you. So now, there can be all sorts of additional supplemental payments that are going to work through your liability, such as premiums on bonds, interest on a judgment, loss of earnings from work, and other expenses can be included in that liability coverage. And just give you a recap, we're currently talking about Part A. We're going to also continue this lecture, talk about Part B, medical payment coverage, Part C, uninsured motorist coverage, Part D, coverage for damage to your auto, Part E, duties after an accident or loss, and Part F, general provisions. So these are all 6 parts of an auto insurance policy, personal policy, that we're going to talk about today. So let's talk about some exclusions where coverage could not be utilized. So one exclusion would be intentional injury or damage. So if it's your intention to cause damage or injury involving your vehicle, then you're not going to be covered. So say, for example, you're driving in a reckless manner, or if you're intoxicated, these are reasons for why you may not be covered. So if you're suffering from road rage and someone hits your car and then you hit their car back, that's not going to be covered. There's also a famous movie starring Kathy Bates where it's called Fried Green Tomatoes. It's an older movie, but it is pretty famous, where she's driving to get a parking spot, and these 2 young girls whip in and cut her off and take her parking spot. She gets so mad that she rams her car into their parked car, and the 2 girls who are out of the car when this occurs look at her, and she pokes her head out of the window and says, "That's right, girls, I'm older and have more insurance than you." Now, it was a funny scene in the movie, but in reality, Kathy Bates would not be covered because she intentionally meant to harm or damage their car. Okay, property owned or being transported. So if you have property inside your car, like a laptop, or you're transporting, cameras, and those get damaged during an accident, they're not going to be covered by your auto insurance. Those would have to be covered by some other policy, and maybe covered by your credit card. Might have some insurance on your items you purchased with that credit card, or your homeowner's policy. Also, property rented, used, or in your care. So if there's damage to property that you rented, or property that someone's put in your care, it's not going to be covered. So for example, say you rented some expensive equipment. I'm trying to think of something that you would rent. Maybe you're on vacation and you rented a bike, and you're transporting the bike with your car, and the bike gets damaged, you would not be covered. Bodily injury to an employee. So so this is how can I explain why do they do this? Well, first of all, the situation is if an employee, if someone say your employee, you're insured, and your employee gets injured, they're not going to be covered because the intent is for you to use your workman's comp insurance, not the auto insurance. So if you're driving employees around, their bodily injury is not going to be covered by your policy. You'd have to use your workman's comp policy. Something called livery conveyance. And I just added a definition of this in the slide here because the textbook doesn't do a really great job of explaining this, but this is basically the transportation of people, goods for hire, such as a taxi service, delivery service. Now I think this would also include like Uber or Lyft. So in this case, and this has to be public or livery conveyance is how they call it. So this is going to be, if you have ownership of a vehicle and you're using it to transport people or delivery, so this is an exclusion in the policy that's going to exclude liability while you're covered, auto is being used as part of a transportation network like Uber or Lyft. So now it doesn't apply to the share the expense carpool, which is something different where you would drive other people to work, where they're chipping in for gas. That's a whole different thing. But basically if you are, it wouldn't count if you're using it for some kind of charitable purpose. You're delivering something for the church or for some sort of group like that. But basically, if you're using your car as as an instrument of business to earn money, it's not going to be covered on your personal auto policy. You would have to have a different type of auto policy to get that coverage. And that's part of the new update of the laws of PAP. Okay. Now, so let's talk about continue with what we were talking about before, which was exclusions to coverage. So there's a lot more exclusions. You're going to use the use of the vehicle in auto business. So if you're a dealership and you're transporting cars, you can't use your personal insurance to cover you. You'd have to use the business insurance. Using vehicles used in any other business. So that's going to be excluded, because if you're using your vehicle for things that are not personal use, then you need to have a separate insurance for that. Now, using a vehicle without reasonable belief the person is entitled to do so. So if you don't have permission to use someone else's vehicle or you're not going to be covered by your liability if you use another person's vehicle and you do not have permission to use that vehicle. Of course, vehicles with less than 4 wheels. So, for example, your auto insurance, your personal auto insurance would not cover you if you're driving a motorcycle. That's a whole separate insurance. Now, vehicles furnished or made available for your regular use. So what this means is a liability coverage for a vehicle other than a covered auto that is owned by or furnished to you or made available to you for regular use. So if you just occasionally borrow a vehicle, then your insurance will be extended to that occasional borrowing of a vehicle. Say you borrow your brother's or your girlfriend or boyfriend's car once in a blue moon, you'll be covered. However, if you're relying on that car regularly to get to work, then that person's coverage isn't going to extend. Your coverage isn't going to extend to that second car. And this is meant to prevent you from, buying one insurance policy and driving 5 different cars, or owning 2 cars, having one insurance policy, and driving 2 cars and not one insurance policy. So it's meant to prevent that. Now, and that leads us to the next exclusion: vehicle owned by, furnished, or made available for regular use by a family member. So this is similar to what we just talked about previously. So this means that if you occasionally borrow your dad's car, that's fine. But if you're driving your dad's car regularly to work, that's not fine. So this exclusion, of course, is similar to what I was just talking about before. However, it does not apply to the named, insured, or family member. For example, if you borrow a car owned and insured by, say, your mom, who you live with, the liability coverage under your personal auto policy would cover you while driving the other person's vehicle if it's not for like regular use. Of course, any racing vehicles. Vehicles you would bring to a track are specifically for racing, a racing car, not an everyday driving car. So you can't use your personal insurance to cover your professional racing car. Now, so let's just make this a little bit clearer. If you have a driver's license, primarily you should only drive the car that you purchased insurance for under your name, or drive a car where you're included as a driver on the policy. That's the clearest way to make sure you're going to have liability coverage. If you borrow somebody else's car, your insurance should cover you, but in some cases it may not. So you have to be careful. It can be a tricky world out there. And so many of these gray areas, you most likely will be covered, but these exclusions are not always really spelled out to you in the policy, and insurance agents just never take the time to really spell this out. So you just be careful borrowing anybody else's car or lending your car out to anybody, because the bounds at which you're liable could change depending on the particular circumstances of how the car is being driven, who's driving it, what state you live in. So again, the surest thing to do is only drive the car that you're directly insured for. You'll have the least amount of difficulties with. Okay. Now, the split limits we were talking about earlier, usually you'll hear an insurance person saying, okay, 250, 500, 100. And what that means is that this is a quick terminology, the split limits, to describe the amount for personal bodily injury, the per each person per accident, the bodily injury to all persons resulting from one accident. So if you have 250, 500, that means that if 2 people in the car, if 3 people are in the car, the max that could be brought against the liability coverage is 500,000, not 750,000. Even though the maximum for each person is 250,000, that maximum would only extend to 2 people. And thirdly, the third split would be for property damage resulting from an accident, which could be 100. So each state has their minimums on the split. So and then you're free to purchase more than the minimum in your state. So generally the insurance agents will offer you the minimum because that would be the lowest insurance rate. But going from the minimum to the next step up is only a few dollars more in your auto policy. So if you have a $1,000 a year auto policy and you go from, say you had, maybe you have 250, 500, 100, and you want to go to 500, 1,200,000, or there's a 500, 1,000, 200. That might only cost you $30 extra a year. So you should really look in to see how much is it to get the next level of coverage for liability. So that's something I would recommend. Now, part 7. If an accident occurs in another state, and the way it works is that if you're driving your car and you have an accident in another state, your insurance is lower than the minimums of that state, then it's going to be automatically provided at the higher limit. So basically, say you're from Alabama, which has a lower limit than New York, and you get into an accident, you have your car registered in Alabama, insured in Alabama, you have an accident in New York, and you have the minimum coverage in Alabama, automatically that minimum coverage would be raised to New York's minimum coverage, which is a good thing. So it will raise to the value of the state. So you automatically get a bump up of insurance when you drive in a state where the insurance limits are higher. Now, if you have more than one liability policy that's eligible to cover a loss, the insurer is going to pay a prorated share of a loss for the owned vehicle, and the insurance coverage is excess over any other insurance for a non-owned vehicle. So it depends on what coverage you have, and then there's an order of they go in order of seniority as far as what's going to cover you in the liability situation. So let's talk about primary and excess insurance. So talk a little bit more about that. Now, so in this particular slide, they're saying Philip, who's named on the insurance policy, borrows Nicole's car with her permission. So the fact that Philip has Nicole's permission is going to help to extend the coverage. So Philip has $50,000 worth of liability insurance, and Nicole has a $100,000 limit for liability insurance. So both policies will cover any loss. Now say Philip injures another motorist and must pay the damages of $125,000. So the rule is that the insurance on the non-owned car is primary. So that would be Philip's insurance would be excess. So Nicole is the primary insurance. Then the other insurance is excess, thus the company would pay as follows. Nicole would be considered the primary. Phil's insurance would consider the excess. And then so of the $125,000 would split by the two policies. So when it says non-owned car, so Philip is the insured and he borrows Nicole's car. So Philip does not own Nicole's car, so it's a non-owned car. So Nicole's insurance would be primary because it's the non-owned car in this situation. I know it's a little confusing, but that's just how it... Now let's move over to Part B, medical payments. So it's fairly common to be in a car accident without any medical consequences. So for example, you're driving a car and relatively slowly and you hit another car. Going under 5 miles per hour, there still could likely be damage. Or maybe you're sitting in the car and you open your car door very, very violently and damage another person's car. So in these cases, likely no medical is going to be involved. And oftentimes insurance companies will try to get you to state, do you have any medical issues, or they want to get a concrete answer as whether or not you have a medical situation or not. So usually if you're in a car accident where both cars are moving, you may not know you've suffered any type of medical issues until the next day or 2 days later. So generally when you phone the accident into the insurer and they're going to ask you questions about your medical state, it's best to say you don't know. Are you injured? I'm not sure. Do you need medical attention? I'm not sure. Because this way, if you do wind up needing going to the hospital later or going to the doctor later and getting some medical care, the insurance company will cover it. You have a more concrete case for the insurance company to cover it. Now, medical payments are covered and will pay all reasonable medical and funeral expenses incurred by an insured for services rendered within 3 years from they should say date. They say the data of the accident. I guess both could be correct. I would think of it as the date. Now, and the coverage is not based on fault. So it could be your fault and you'll still receive the medical coverage. The named named insured and family members are definitely covered while occupying any motor vehicle or as well as any pedestrian struck by a motor vehicle. Other persons occupying a vehicle are also covered, but only in an owned vehicle. So let's just think a little bit more about this. So think of it as sort of two groups: named, insured, and family members. So if you're named on the policy, and your family members will definitely be covered for medical. So other persons who are in the vehicle when the accident occurs will also most likely be covered. And of course, any pedestrians that happen to be in the mix of the auto accident are going to be covered. So for example, if the parents and children are injured in an auto accident while on vacation, their medical expenses are covered up to the policy's limits. If the named insured or any family member is struck by a motor vehicle or trailer while walking, his or her medical expenses will also be paid by primarily the other person's insurance company and secondarily your insurance company. But if you're injured by a different type of motor vehicle, like a farm tractor, snowmobile, a bulldozer, your injuries are not covered because those vehicles are not what are considered roadworthy. So if your car is damaged or injured by another person's motorcycle, you would be covered because those are considered roadworthy. But dirt bikes are not roadworthy. So that's why it's not a good idea to drive your dirt bike on regular public roads. Okay. Now, when we talk about other persons occupied a covered vehicle, so other people are going to be covered for their medical expenses while they're in your vehicle. So, for example, you own your car and you have the insurance in your name. All your passengers in your car are going to be covered by their medical expenses will be covered by your policy. Okay, so that's all pretty obvious. But they have to state this in these insurance contracts that none of us read. But you want to know that if you're driving a vehicle, everybody inside your vehicle is going to be covered under your policy. And anybody outside your vehicle that gets injured is going to be covered by your policy. Okay. Now, there could be a situation where you have insurance on your car and somebody else has insurance on their car, and it's 100% their fault. But generally, in the state of New York, your medical coverage will be covered by your insurance policy. And then the insurance company will have to decide whether or not they want to try to get reimbursed by the other company's insurance policy, depending on whose fault the accident is. And that's why there's a lot of legal work and arbitration behind the scenes that auto insurance companies will do with each other to help limit the cost of litigation. Okay, continuing with the medical penalty payments. Not penalties, it's medical payments. Exclusion. So when would you not be covered for injuries you sustain in an auto accident? Well, if you're in a vehicle that has less than 4 wheels, so if you have auto insurance for cars and your own personal auto insurance for a car, you're not going to be covered if you're driving your dirt bike or your motorcycle. You need separate insurance for that. If you're operating the vehicle as part of public or livery conveyance, such as a taxi driver, Uber, or Lyft driver, this is not going to be covered under that policy. You need a separate policy for that. When the vehicle is used as a residence, so if you're living in the vehicle like a camper, medical payments are not. So you're in the camper and you break your arm inside the camper, you can't look for your auto insurance to cover that. Unless there was an injury occurred while in motion as part of an accident, maybe, but definitely not if it's just standing in your driveway and you hurt yourself in it. When the vehicle is used without a reasonable belief of permission, if you basically steal or take someone else's vehicle without their permission, you're not going to be covered. Injuries resulting from a nuclear war or regular war, which is unlikely to happen, or if the vehicle is competing in a race. So if you're gonna be competing in an official race, definitely not covered. And if you were drag racing, that's questionable. So if you were drag racing your car for fun or kicks, I would I would advise you not to admit that you were racing your car as part of the description of the accident. I'm not saying you should lie, but that could be grounds for not being covered. But most likely, if you're racing your car, you wouldn't be covered anyway because that would be a reckless activity. Okay, if more than one auto policy covers a loss. So the insurer pays a pro rata share of the loss for an owned vehicle. And the insurance company is excess over any other insurance for non-owned vehicles. So this basically means oftentimes when it comes to these medical payments, there could be these situations this is basically describing is, say you have your own auto insurance and you're in a passenger in someone's car that has auto insurance. So there would be coverage could be coming from both policies depending on the amount and whether you're the driver or the passenger. So these are just things to think of. And you also have to, when we go to Part C, it's more common than you think that another motorist doesn't have coverage. So in some states, you can have a high percentage of the motorists don't have any car insurance. So some of the worst states to drive in and have an accident in would be Florida and Mississippi. Florida is close to 30% of their drivers don't have insurance. Mississippi, New Mexico, Michigan, and Tennessee, close to 20% of their population don't have auto insurance. States which has the highest percentage of coverage would be Maine, New York, Massachusetts, North Carolina, and Vermont, all single digits, less than more than 90% of the owners of vehicles have coverage. So what happens if you're driving and you get into someone collides into your car, not your fault, and they don't have insurance? Well, this is going to fall into Part C, uninsured motorist coverage. It's something you should definitely check to see if your policy, what does your policy say about uninsured motorist coverage, especially if you live in one of these states that has a lot of motorists driving around with no coverage. Now, in some states, even in New York, you're going to always have a certain percentage of people that, they don't have a driver's license, they're not insured, but yet they're driving vehicles around. So they're borrowing someone's vehicle and they're driving it, and they get into an accident. So this is really bad for that person. Or there could be a situation where it's a hit and run. So that would be considered an uninsured motorist because you can't really find the person that hit you. So in this case, we have this insurance in case this happens and there's no other party with insurance. So in some states, property damage will be covered. The uninsured motorist must be legally liable for the coverage. And the insurer's maximum limit of liability for any single accident is the amount shown in the declarations. So this is a more common occurrence than you think. It's not a good situation to be in. Now, oftentimes, like I was saying before, there's arbitrage for the insured as far as the amount of damages that will have to be covered, and the coverage is going to apply to the named insured person and family members. Other persons occupied the covered vehicle, so your passengers, and a person legally entitled to recover damages, say there was some kind of property damage as well. So this basically is important because it covers you in the case that the other person doesn't have insurance. So if you don't have this coverage, then you're going to have to personally try and sue the other party to recover the damage, the cost of the damage or medical costs, expenses that you incurred during the accident. Now, like I was saying before, if we look at two married people, they have probably the greatest ability to be covered on the other person's car insurance. So if you have a married couple, they both own vehicles, and oftentimes those vehicle policies are joined for reduction in costs. But in reality, only one of the two spouses need the insurance because in most cases, the other spouse will be covered. That's why they have that rule. If the car is regularly used, they want to try to exclude some coverage. But when it comes between family members living in the same household, coverage is usually extended. But this should also always be talked about with your insurance agency to really pose these questions. If my son or daughter drive the car and there's an accident, how does my policy, in most cases, though, you would want to talk to somebody that's not your actual insurance company in some cases, or your insurance company and not letting them know who you are, because they're going to try to encourage you to put that person onto your policy officially, which means your policy rates will go up. And in some cases, you may not officially need to put them on your policy if they don't drive your car regularly, because the cover should be extended. Okay. So I'm just basically saying that your spouse or children may not be considered uninsured motorists if they're driving your car because you're a car and they have insurance through you. Okay. But again, it varies between state and varies between insurance companies, unless it's specifically mandated by state law. Here are the uninsured percentages by state. So you can look at these as some of the lower and higher end states as far as uninsured drivers, percentage of the drivers. So you can see it's a fairly big problem. And just continuing this for the remainder of the states. Find your state where appropriate. Okay. Now, so there are 4 groups of vehicles that are considered to be uninsured vehicles. So the uninsured one would be no insurance. So basically, there would be an uninsured motorist. There'd be no uninsured motorist coverage on the vehicle. So if you don't have the uninsured motorist coverage on your policy, then you're going to be excluded for getting that coverage. That's why you want to check, do I have uninsured motorist coverage on my policy? And you may not have that coverage. So in the case you don't have your coverage, then it's going to be excluded from covering you in that case that occurs. Primary coverage under another policy. So say, for example, family members who are not covered while they are, occupying a vehicle owned by the named insured person, for which is insured for uninsured motorists, coverage on a primary basis under another policy. So the intent here is to have such family members seek protection under the policy insuring the vehicle that they're occupying. So it basically just means it's going to be directly to the insurance, the uninsured insurance for the person owning and operating the vehicle is who would be covered. Okay. A vehicle is used as a public or a conveyance. So this is if it's used for like a business of transporting people or delivering goods. So your personal insurance policy would not cover you if you're driving a Peapod van to deliver groceries. There's no reasonable belief that the person is entitled to drive the vehicle. So if you're not entitled to drive the vehicle, you stole the vehicle, then you're not going to be covered by uninsured drivers. When workers' comp benefits can be applied, so if it's a work situation, they're going to go for workman comp rather than uninsured motorist coverage. Okay. And also the personal auto policy is going to exclude any payments for punitive damages in uninsured motorist situations. So there are, and it's saying here that there are several limitations when one or more uninsured motorist coverage provisions apply to a loss. So, for example, they're saying insurers provide coverage on a vehicle not owned by the named insured. The insurance provided is less over any collectible insurance provided on the primary basis. So it's all legal speak of trying to determine who is going to be paying for this damage. All right. So what about underinsured motorists? this coverage can be added to your policy. It may already be there, or in some states you may have to ask to have that coverage. And having this coverage gives you much more complete protection, especially in states where there's a high amount of people without insurance driving around. So the limits of how much it's going to pay is going to be stated in your policy. And some states the coverage will be mandatory and you don't have to worry about it. It'll be automatically included in your policy. Other states it's not automatically included and you should ask specifically. I think it's a really good idea to have that. Let's move over to Part D, which would be coverage for damage to your auto, otherwise known as collision coverage. Now, this is often the very expensive type of coverage for your vehicle, adding in some cases over $1,000. It can be anywhere from, I guess, $100 to $1,000 of annual cost to your insurance policy to have collision. Now, in some cases, you're required to have collision. Say, for example, your bank may require you to have the collision if you have an auto loan on the car, and you'll be required to have collision if you're leasing the car. But if you own the car fully and outright own the vehicle, you don't have to have collision. So you can own the vehicle, and if you choose not to have collision, you can do that. That's something I did back when I was in college. I had a car that had some value to it. I think the value back then, maybe the car was worth $6,000. And it was going to cost me an extra $1,000 to have collision insurance with a $500 deductible. So I figured, because I didn't have a lot of money back in college, that I would just skip the collision insurance. And I drove that car, and actually the next car I had, which were two used cars, for 10 years. And I saved probably about $10,000 by not paying for collision, which means that if I'm in an accident where I'm at fault, my car would not be repaired for damages to the car. If I was in an accident, say, for example, someone rear-ended me, then the other person's insurance policy would pay to repair my car. So I was willing to accept the fact that if I caused the accident, then I would be responsible for repairing the physical aspect of my car. Dented bumpers, broken windshields, crumpled fenders, damaged axles, things like that. So luckily in 10 years, those first 10 years, I never had an accident and I saved $10,000, which I used that money every year that I didn't pay for collision. I put that exact amount I would normally owe the insurance company, I put that into a bank account. So eventually that became my down payment on my first new car, which at the time I think cost about $20,000. So it paid for half of my first new car. But when I got that new car, I definitely paid for the collision insurance, because now if there's an accident, I could be damaging and losing up to, if the car's total, I could lose $20,000. So at that point, it became more beneficial for me to pay for collision. So the point of the story is, if you have a car that's not worth a lot, you're best off not to buy collision insurance, because they'll most likely, after a few years, it'll pay for itself in with the value of the car. But that's a personal decision. Anyway, so of course what I've been talking about is if there's damage to your auto, physical damage to your auto, collision will pay to cover that. Now, if and this is specifically needed if you cause an accident and the damage is your fault, your car will be repaired by this collision. If the damage is someone else's fault, their policy will repair your car. Now, the collision losses are going to be paid regardless of fault. So you don't have to worry. If you have collision, your car will always be covered. If you don't have collision, your car would only be fixed if it was 100% of the other person's fault. Or it might be 75% the other car's fault, 25% your fault. In that case, you'll be responsible for 25% of the repairs in most states. Okay, so let's talk about, other than the collision loss, what are some other perils that could affect your car that collision would pay for? So there's a lot of things that could occur that that would be other than a collision loss. One could be theft is a common one, where your car is stolen. There could be hail, flood, fire, wildstorm, explosions, earthquakes, vandalism, riots. Could be damaged by a bird or an animal. So these are other perils that could damage your car. You have to really see what your policy says. For example, if your car runs into a deer, it's not considered collision loss. So the physical damage to the car is considered other than collision loss. So if your policy isn't going to spell out, for example, if you're damage to your windshield, if it's not caused by a collision, it's not going to be covered by as a collision loss. So you would have to have glass coverage that's separate from collision coverage. So in all these cases here, these don't involve a collision, but you want to make sure that your coverage is going to include these. Now, you may not live in an area where there's a lot of missiles that could damage your car, so you probably don't need that. But you might live in an area where missiles fly around quite often. In some countries, it's quite possible. You might want to have that insurance. What if a non-owned vehicle, is that also covered by Part D? So when it says non-owned, it means a vehicle you do not own. So if you have, when we're talking vehicle, we're talking most cars, trucks, vans. Now, it means when it says not owned, it means that you don't own it. But for some reason, you find yourself driving it. So if it's a car that is available to you for regular use, that could be something that could exclude you. So the coverage is going to apply to temporary substitute vehicles, definitely. So, so in certain cases, if you have Part D insurance, collision, and you're driving a temporary substitute vehicle, maybe a dealer loaned you a vehicle, or you leased or you rented a vehicle, your coverage will be extended. However, if you're driving a car you regularly don't drive, you're borrowing someone's car, you will be covered. But you won't be covered if it's a regular thing. You're using that car regularly to drive to work, and you're not insured for that car. You may not get coverage. So you got to be careful with that. Now, also, family members are generally covered when they're not using the car on a regular basis. Now, let's talk about what happens if you rent a car. Let's be a little bit more specific in that situation. Because oftentimes when you rent a car, they're going to try to convince you to get the CDW, which is the collision damage waiver. And which is not, this is sort of should you or shouldn't you? Because it costs extra. It may cost up to $30 extra a day. If you have your own auto insurance, it's not necessary to pay for additional damage, for additional insurance on that rent-a-car, because you are covered. So if your normal car has collision and comprehensive coverage, that will extend to your rent-a-car. But we have to think about a few things here. Go back to that previous slide. So let's just talk about when you rent a car. So if you have your own car insurance with the collision and comprehensive, then that's going to extend to your rent-a-car. However, your credit cards may also claim that they're going to extend to your rent-a-car as well. So you might feel like I have plenty of coverage. I shouldn't have to take, I could ask for the waiver, the collision damage waiver, because I have the credit card I'm using to lease the car, to rent the car has, not leasing is a different situation. It's like buying a car. To rent the car, I'm using my credit card, and I also have my own auto insurance. So I should need to get additional insurance. But why it might be a good idea, especially if it's not a lot of money per day, is because if you do have an accident with the rent-a-car, then a police report has to be filed. then and damage is done to your car. If you have an accident with your renter car and somebody else is involved, the police definitely have to be called if there's damage or injuries. But if you damage the rental car, say it's parked and it's damaged, or you do some kind of manner of damage, you drive into a cement pylon or something like that, then they're going to have to go through your insurance first, and then anything that's not covered by insurance may be covered by the credit card company. But we all know when you file a claim on your car insurance, your rates likely will go up. So it's also a huge hassle to have to deal with these car rental companies if you don't have their added insurance. So I usually recommend to people, and for myself, if I'm out of state and I'm renting a vehicle, or even in state, I guess, but most of the times I rent a vehicle, I'm out of state, I'm going to pay the $9 to $20 extra a day, especially if it's only for 5 days. We're talking $100 here. I'm going to pay for that insurance because I have paid for that insurance at 5 separate occasions when I rented a car, and 3 of those occasions it was utilized. So one occasion I was driving and the car got a flat tire, and I was, on the way to the airport. So, and returning the rental car at the airport. So I had no time to file any type of insurance claims and make my flight, which means I would have lost my flight if I had to go through the insurance company and deal with the car rental company. So in this case, I just pulled up to the car rental company. The tire was flat. They started doing all this paperwork out and all these threats. And I said, hey, I got that full extended damage coverage for my vehicle. Oh, they said, oh, okay. So automatically everything was dropped, and I just quickly went to the airport and they took care of everything because they're fully responsible. Another situation was I had my normal car was being repaired, so I had to rent a car for a couple of days. And I swear to you, I did not damage this car in any way. I returned it to Enterprise Rent-A-Car, and suddenly they're coming up with there's damage to the car that wasn't there before I rented it, which was total nonsense. And it was very minimal damage, a dent in the side of the car that, they assured me when I rented the car would not be a problem, but when I returned it, they're trying to, making claims that, this is, the car, you damaged the car. And at the time, they didn't realize that I had paid for the collision, the damage insurance from the rent-a-car company. So they started saying, okay, we're going to call the police now, and you're going to have to file this paperwork, and you're going to have to provide your insurance. And I was like, they were being very aggressive. I go, wait a minute. I paid for the Enterprise Rent-A-Car extra insurance on the car. Suddenly, oh, you did? Oh, I'm sorry. Okay, everything's fine. Go away. You're fine. And, as I'm leaving, I'm seeing them renting the same car to somebody else. So I went up to that person and say, I just want you to know, document this dent here, because even though they're telling you it's not going to be a problem, they try to charge me for that. So that was the second time. The third time I had rented a car, I had accidentally drove, do you know how they put these cement barriers in the parking lot so you can't go cross between parking spots? So I scraped that barrier, which was cement, and it caused some significant damage to the bumper. So when I brought the car back, this time, and again, the situation, I have to bring the car back and catch a flight. So I bring the car back, and I said, listen, I damaged the bumper here, and don't worry, I have the full insurance on the car. And as soon as they saw that I had the full insurance, okay, no problem, we'll take care of it, go, you're done. So it's so much easier when you buy their insurance. You're just basically free. And it's nice not to have to worry about returning the car and any potential damages they may find that may or may not be your fault when you get the insurance. So if you can afford the extra insurance, it's well worth the peace of mind. And that's basically how I feel about it. Now, okay, so let's move on. So coverage is written for separate deductibles for collision and other than collision losses. So for collision usually has a deductible $0, $250, $500, or $1,000. Now, if you take the $1,000 deductible, most of the time when you have some sort of accident, the damage is going to be less than $1,000. So you're going to be paying for it. But if you take it where it's $0 deductible or $500 deductible, of course your premiums are going to go up. And your premium might go up a couple $100, $300, $200. I'm not sure. Depends on the situation. So you have to decide whether or not you want a deductible. When I didn't have a lot of money, I always had the $1,000 deductible. But then when I had more money and I could afford it, I paid the extra money. In some cases, it might only have been $50 a year to get, a $250 or $500 deductible. Now, the Part D will also pay for temporary transportation expenses. So this is the part that will pay for or rent a car in case of, you can't drive your car and it has to be, you have to have rent a car while they're fixing it. Also, towing costs could be covered as well, but usually you should make sure your policy have that. You may have a separate charge to have towing covered in your policy as well. Exclusions for collision or Part D, again, these are very similar. This first one is very similar. We talked about if you're using the car as a business to deliver people or products, it's going to be excluded. If there's any damage from normal wear and tear, so you can't evoke your Part D coverage if your tires go bald or if your brakes you need new brake pads. So normal wear and tear will not be covered. Freezing, mechanical or electrical breakdown. So if your car has a mechanical breakdown, something breaks in the car, you can't cover that under collision. However, you can get separate insurance that will cover mechanical or electrical breakdowns of your car. It's very rare to get any type of insurance that will cover wear and tear. Any radioactivity from war or nuclear war. A lot of these insurance policies are written in the 50s and 60s, and the original base policies were created when that was more of people thought that was a big threat. Or insurance companies thought that could be a big threat to them. Electronic equipment, your radio, your CD radio, on your speakers are not going to be covered. Your tape decks, there are no such thing as a tape deck anymore. It would be a CD player or nothing, because most of us are going to stream our music in our cars these days. And of course, the racing, or if you have a trailer or a camper, these are not going to be covered under only your car. So if you have a camper attached to your car and the camper gets damaged, it's not going to be covered for collision, only your main car. It's not an extension of your car. Of course, if you're racing as well. So if you have a total loss, where they say your car is totaled, what that means is that the insurance policy is just going to pay up to the actual cash value of the car. So if the car has damages, say your car is worth $10,000 and your car needs $15,000 worth of repairs. In that case, they're not going to repair your car, and they'll just give you the value of your car, and they'll call it a total loss. If it's a partial loss, then they will pay for the repairs to bring your car back to the state it was before the accident. Now, here's something about when you do get your car repaired. Oftentimes when the auto shop puts in the estimate for your car's damages, they're going to do it with what's called original equipment manufactured, OEM parts. And some disreputable shops may turn around and return those parts and buy generic parts to put in your car, so they save money and make more profits off you. I would say this is not strictly legal to do this, but you may want to question or double check that the parts are original equipment manufacturer parts, not some generic parts, if that's what your insurance paid to be put in your car. This is not that common, but it's been known to occur. When I was in college, I worked at a gas station that also did auto body repair. And at this particular gas station, it was quite common for them to do this. Is how I learned about it. So you've got to be careful when, sometimes when your car is repaired, in some cases you may have a deductible but the auto body, the auto body repair may work out a deal with you that they cover some of that deductible. You have to talk to them and really try to get the best deal you can if your car is being repaired by them. In some cases, the auto body shop is going to be straightly contracted directly from the insurance company. So the insurance company will have a relationship with the auto body. You don't need to talk to them. The insurance company will make sure that everything is covered and that they meet their specifications. This is probably the easiest way of doing it, is going to an auto body, such as Geico usually has auto body shops they work with that are pre-approved. And it's probably the easiest to get your car repaired and have 100% of the coverage through the insurance company. And you can purchase gap insurance. So what gap insurance is if, say, you have a new car, and you know how you drive a new car off the lot and suddenly loses a lot of value. So say you bought a brand new car, it's a month old. The new car cost is, $25,000, but now your car can only resell at $22,000 because it has some miles on it. If that car is totaled, and you go to you want to replace it with a new car of the same make and model and year, you're going to have to pay the difference between the current book value and the cost of a new car, which could be anywhere from $1,000 to $5,000 maybe. This gap insurance will cover that difference, so you can get that new car with no additional payments. So if one or more auto policy covers a physical damage loss, it could be a prorated event. So say two cars are involved, what percentage of it would be, your policy could be deemed to be, okay, you're 75% responsible, you're going to pay 75% of the loss, and the excess can be covered by the other policy. You might be deemed 25% responsible, or if there are two auto policies, they're going to, they could work together to cover the loss. So that is usually something the insurance companies figure out and explain to you. It's really, they have a formula for what exactly occurred to the accident, what people say, was the reasons for the accident, what insurance policies are involved. It gets a little complicated. So sometimes if there's more than one auto policy involved, they can help cover the loss of the physical damage. Now, what are your duties or responsibilities if there is an accident? Okay, so if you're driving a vehicle or a car, chances are in your lifetime you're going to have multiple car accidents. And chances are most of those car accidents you won't be injured at all. I've been involved in a few car accidents. Most of them I've been rear-ended at a low speed. So once on campus, I was at a stop sign. I was stopped at a stop sign, and another car rear-ended me when I was stopped at a stop sign. So in that case, when the police officer arrived, I said to the other driver, I said, I was stopped and the other driver hit me in the back of the car. It's the other driver's fault. And the other driver agreed that it was his fault, which is something that they say they shouldn't do. So anytime the insurance company tried to come at me to be responsible for any costs related to this event, I would just say, well, look at the police report. The other driver admitted full responsibility for this accident. So that in that case, they had no case to try to make my insurance company pay for any part of the accident. Now, say God forbid you do get into an accident, multiple drivers are involved. Let's hope this never does happen to you. And it's quite shocking and scary when it happens at first. So what you need to do is, first, I would say, contact the police if there's any damage or injuries to people. If there's some sort of small collision, there's really no damage, or it's just a couple of scratches, you don't need to, in most cases, you wouldn't need to call the police or the insurance company if it's just minor damage that both parties are willing to assume. For example, it's two used cars that are rather old, already has some damage. Maybe both parties just agree that, okay, this is no big deal, just move on. But in most cases, if there's damage, you're going to want to notify the police. Then you're going to want to, it's going to take a while for the police to get there. So then you're going to want to promptly call your insurance company and cooperate with the investigation. So you're going to need to send the insurer copies of the legal notices in connection with the accident that the police are going to produce. So you may also have to take a physical medical exam if required. So what I would suggest, and we'll go over this more thoroughly in some of the other slides here, but I would suggest if you do have an accident, and hopefully it's an accident when only the vehicles are injured, the drivers are not injured, I would say take the time, since you have a camera in your phone, photograph the accident. Photograph the intersection, photograph where the cars are, photograph the damage on the cars, photograph the other car's license plate and driver and your car. So document as much as you can the accident with your phone camera. So you can provide these, especially if it's not your fault. If it's not your fault, you want to provide all these photos to your insurance company to prove you're not at fault. And also document the damage. Now, of course, the insurance company is allowed to inspect your vehicle if you're seeking, coverage for collision. Now, let's just talk about cancellation. So, states, depending on the state, is going to be the specific terms, but all states restrict the insurer's right to cancel or non-renew your coverage. So basically, there's a cancellation provision. So they can cancel anytime by returning the policy to the insurer. So you, as a named insured, you can cancel the policy at any time or providing written notice. So if a policy has been enforced for more than 60 days, the insurer can cancel the only if the premium payments have not been met, the driver's license has been suspended, or a policy has been obtained through material misrepresentation. So if you misrepresented yourself saying that you're married when you're not married, or somehow made some fraudulent claims in the policy, it can be canceled any time. So you, as someone who has the policy, you are free to cancel your policy at any time. So this is what I'd say. Usually this occurs when you want to switch, you see all those commercials, save $500 in 15 minutes. So you figure out the car insurance industry is a lot like the cable industry, where if you don't watch them, suddenly your bill is double. You started out with a $500 a year car insurance, and now it's $2,000 a year. And you call your car insurance company to complain, they won't lower your rates. They'll make up some reason. Oh, it's more, cars are more expensive now, and in your area there's more accidents, and they'll justify why you pay so much. Contact another insurance company, and they'll give you a much better rate because they want your business. So there's a reason why most people cancel their policies, is because they went to a cheaper rate, not cheaper insurance. In some cases, you might get better insurance at a lower rate. So in that case, I would say that you should contact your current insurance company and say you're canceling the policies. So usually there's a form you need to fill out that you fill out and sign and mail it back to them, that's stating that I'm canceling my policies and these are the dates that I'm canceling them. That way, if they try to charge you for your policies after you've canceled them, you have some kind of proof or record that you notified them and that they were canceled, so they can't try to go after you for the money that they think is owed to them for a policy that's continuing. But on the other side, the insurance company, they'll be quick to cancel your policy if you don't pay, or if you have your driver's license suspended, or if they've discovered you lied somehow. Now, also there is non-renewal. So if they decide to discontinue your coverage, you have to be given notice at least 20 days before the end of your coverage. So your coverage is going to end. Typically, these policies are oftentimes only 6 months or maybe a year. So if you get a 6 month policy and they decide to drop you, which is a non-renewal, then they have to give you 20 days to do that. Why would they not renew your policy? Well, if you happen to have placed, if you're involved in too many accidents, that might be a reason for them not to renew you. However, most companies, they typically don't like to non-renew. They just like to increase your insurance costs to help make it more profitable for them to insure you. Now, automatic termination is a policy is automatically terminated if the insured declines the insurer's offer to renew. So if you don't accept the renewal, they can automatically terminate. Now, if you have your personal auto policy, this is going to cover you. So you get a personal auto policy from New York State. This will cover you in all of the 50 states. Your insurance policy will be valid. in any U.S. territory, including Puerto Rico, and Canada. So there's an agreement where if you drive your car into Canada, your New York car insurance will cover you when you're driving in Canada. And the same thing, if you're in Canada and you drive your car in the United States, your insurance will cover you here, as well as your driver's license from New York will be acceptable if you're pulled over in Canada, and your Canadian driver's license will be acceptable in New York if you're driving New York. So these are agreements made by these two countries because they're so close and share such an open border. Now, the last slide here we're going to talk about today is a miscellaneous type vehicle endorsement. So this can be added to your PAP. This could be to insure motorcycles, mopeds, motor scooters, golf carts, dune buggies, etc. So it will not typically cover snowmobiles. And this liability coverage is not applied to a non-owned vehicle. It has to be to a vehicle you own. And a passenger hazard exclusion can be elected, which excludes liability for bodily injury to any passenger on the motorcycle. So these are, if you have these other types of vehicles, you may want to extend your auto policy to cover these vehicles. And that could be, instead of getting separate insurance, it might be a cheaper way of doing it. So you should look into it if you have any of these other type of vehicles. Okay, so that's the end of chapter 20. The next chapter 21 will be a continuation of auto insurance because we still have more to talk about. Thank you, and I'll see you in chapter 21.